Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of the 11th until the 15th of July. Before we dive into the webinar, some of the key highlights of the week were the fact that inflation hit 9.1% or a 40-year high on Wednesday in the US. The euro-dollar came to parity for the first time in 20 years, and on the stocks front, UBS downgraded Netflix's price target. As always, please note that all of the ideas discussed in this webinar are my opinions and do not make up for any form of investment, trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. So looking at stocks first, as we mentioned, UBS slashed its price target for Netflix in what seems to be yet another blow for the stock price of Netflix specifically, and it comes especially at a very key time because, we're underway with regards to the US earnings seasons kicking off this week, but it's actually, we're going to be getting more and more names. This week was more or less like the introductory week, if you want to put it that way. Next week, we're obviously going to have even more names reporting figures all the way until the very end of the earnings season. And I keep mentioning it's a key time for Netflix because obviously it's going to report its figures next week. So obviously this downgrade doesn't come at the best time, seeing as how they're going to have the report next week. And if it ends up missing expectations, then we can see the stock price of Netflix tanking even further. Looking at the price chart in front of us right now, we're on the weekly time frame, and you can pretty much see the staggering drop we've had since the start of the year. And to put it into context, it's down by more than 70% from the highs up here. So it's a pretty considerable drop. And looking at the price right now, it doesn't really look like it's going anywhere. It's like pretty much consolidating since the beginning of May. But seeing at the last leg, which was towards the downside, one could assume that the next leg would be towards the downside. Otherwise, we would have already started seeing some kind of upside momentum rather than just seeing it consolidate on this sideways pattern. Because this would imply that obviously we don't have strong sellers, but we also don't have strong buyers either. So next week with the earnings report, obviously, we're going to be seeing what kind of impact that's going to be having with regards to the stock. If we wanted to put some moving averages as well. So if we just add, let's just put the 50 moving average. So I'll just keep it as the phone. You can see we're pretty far down from it. So usually using it as the mean price over the last 50 periods. In our case, it's going to be 50 weeks. We can expect some sort of retracement, but again, like we can see, like even back here when it was already pretty far away from the 50 period moving average, we still didn't see any considerable retracements back to it, and instead we tanked even further. So obviously, not just for Netflix, but stocks in general that you may be watching next week is going to be a very interesting week, seeing as how we're going to have all of the earnings reports coming into play as well. Now, moving on to Forex, and as we mentioned during the highlights, we had inflation reaching historical levels in the US, being at 9.1%. So this meant that the dollar index had yet another strong week. So if I just quickly switch to the trading view charts, we have Bitcoin on for now, so I'll switch this to the dollar index and obviously put it on the weekly time frame. So you can see we're pretty much breaking through key levels. We're breaking towards the upside. This is the third consecutive week in the green for the US dollar. With inflation being at 9.1%, analysts are now even expecting a 100 basis point hike rate from the Fed. So obviously, what is this doing? This obviously just pushing the price of dollar higher, and which is also, it leads me to the next highlight we mentioned, which was the fact that the euro dollar reached parity for the first time in 20 years. Last time this happened was back in 2002. So if we scroll, we'll pull up the chart of the euro dollar and we look back towards 2002, which is going to be all the way. So somewhere here you can see more or less is when we hit parity, but on that occasion we're coming back from the downside. On this occasion we're coming up from the upside and coming down into parity level. So it was definitely quite interesting, like living through that period where nobody was considering, or not a lot of people were really considering seeing the euro dollar back into parity. But here we are right now, is trading at pretty much the one level mark. So we're going to be seeing in the next few days, weeks, and even months. I mean, it also depends what kind of response we're going to be getting from the Fed, because, yeah, of course, we're expecting a 100 basis point rate hike, but of course, that doesn't mean that's how the Fed is going to play out. But definitely interesting times to be in with regards to the Forex market, seeing as how we're having these events that haven't happened in the past either 40 years, if we're looking at inflation, or the parity level with the euro dollar for the past 20 years. Now, from what I saw from the chart, that was the third consecutive week in the green for the dollar index. Has now risen by almost 4% throughout that time. And looking at a notable pair, I would say the dollar and the Japanese yen is one that's pretty interesting to watch, seeing as how, I mean, the banks, they have two contrarian views, if you want to put it that way, when it comes to how quickly they will be hiking rates. On one hand, we have the Fed, who obviously they want to be aggressive in order to stave off inflation. And on the other hand, we have the Bank of Japan, who's being and following their traditional ultra-conservative approach, which is still keeping interest rates in negative territory. And by looking at the chart, you can see pretty much these opposing views into play as well, seeing as how since the beginning of March, we can see by how much the dollar has risen against the Japanese yen. To be specific, it has risen by more than 20%, or 2,000 pips in the span of these 4 months, which is a pretty, if I switch this to the monthly time frame, you'll be able to see an even better picture of like the kind of candlesticks we're talking about. So it's been pretty much green after green after green candlestick. We had a little bit of a pullback here. It wasn't even anything considerable, seeing as how we had these two big green candlesticks the 2 months prior to that. So again, we can pretty much see how those opposing views are playing out with regards to the specific currency pair as well. And then this leads me to the next point, which is looking at commodities. And obviously, with the dollar index climbing to multi-year highs, as one would expect, this also has a direct impact on commodities, specifically for oil and gold. Now, if we look at gold specifically, if I pause the video right now and I asked you to guess where gold prices would be, I'm pretty sure most of you would say they would be looking towards the downside, which is essentially what they're doing. Seeing as how you have the strong inverse relationship between the dollar and gold itself, the fact that we have all of these talks with the rate hikes about the US dollar, and the fact that the gold doesn't return any interest, one can understand why we're seeing this kind of drops with regards to gold prices. And just looking at the chart, we can see this is pretty much the 5th consecutive week in the red. And over the course of this time, it has dropped by almost 9%, or close to $40, which is it's a pretty considerable drop for the prices of gold. And now, with regards to, I mean, we can see we're pushing into these levels where we did have some pretty decent bounces looking at the historical price action. But obviously, back then we didn't have the kind of talks we're having now with regards to interest rates. I mean, again, obviously the time will tell whether we're going to be bouncing off of these levels or not. What the case now is, of course, is that we're pushing into these levels, and should we break through those levels, because prices now are obviously also below now the 50 period moving average as well. So the next levels to be looking at will be down around about this area right here, in my opinion, and the mid 1500s or towards the beginning 1500s. So it's going to be a round number as well, which they can act as pretty good structure levels as well. But again, obviously we have to clear this level first, which is the first significant one. And then we can look to see what other areas we can target should we break below this area here. And looking at oil, it's pretty much behaving somewhat similarly with regards to price action. Now, one might say, yeah, sure, it is behaving similarly, but we don't get the same consecutive drops with oil as we get with gold. But I would say, I mean, if we look at it percentage-wise, even oil itself, this is just the second consecutive week in the red, whereas gold, we said it had 5 consecutive weeks in the red. but it has fallen by just as much. If we put it in percentage terms, prices are down by almost 10% over these last 2 weeks. So if anything, like in these 2 weeks, obviously we had a greater magnitude of price drop with regards to oil rather than gold, because in 2 weeks it basically dropped as much as gold dropped in a span of 5 weeks. So you can see, I mean, obviously we're still above the moving average, which is different when looking at gold, which is below its moving average. But similarly to gold, we also have this structure level, which is kind of already rejecting off of. So you can see we're going to be like stuck in this range that again, it began all the way back in the beginning of March. But obviously, any further reports we get with regards to the oil supply, any other updates we get with regards to the war between Russia and Ukraine, which of course is something that is still ongoing, then obviously those are the things that are going to be impacting oil prices by just as much. So yeah, like we said, next week is going to be a big one. We have the earnings reports. I mean, it already kicked off, but obviously next week is when we're going to be having even more companies reporting numbers compared to this week. So definitely stay tuned for the outlook as well. We're going to be covering some of the key companies who will be releasing their figures next week. Of course, one of them that we already gave out is going to be Netflix. So you already know that one, but of course, we're going to mention a few more as well. Yeah, there you have it. This as far as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.